Greetings, members one and all of the Salivation Nation. The dollar is a little weaker, and gold is a little stronger. That is the headline for today's news, but probably the bigger headline is probably that Palladium has set a new record. Let's explore. Yes, it looks like here from Reuters that there's some headlines here, some little bullet points talking about how investors are kind of watching the Sino-U.S. trade talks. The SPDR gold holdings are the highest since the end of July, and Palladium has touched a record high at $13.24 per ounce. Craziness. I remember buying Palladium when it was at $167 an ounce. Platinum has hit over a 1 month high at $831 an ounce, so it's creeping up too. It's starting to react. In a prior video, I mentioned how it wasn't doing a whole lot amidst all of the chaos with the markets. But here, this is talking about how gold had rose on Monday just below a more than 6 months peak hit by the last session, as the dollar slid on reduced chances of a further rate hikes by the U.S. Federal Reserve, and the United States and China resumed trade talks. And by the way, the USMCA, all it needs to be is just approved by Congress, and we should be good to go. And so we'll see how that plays out. And also should be noted, but the Fed talks that the Fed chairman of the Atlanta branch, I think, is talking more like there may be only one rate hike this year as opposed to the rumored 2. Palladium hit an all-time high as the market suffers from a sustained deficit due to high demand and a supply shortage. The metal, used mainly in emissions-reducing catalysts for vehicles, was trading at a premium to gold, so it's well ahead of gold now. Spot gold was up 0.3% to $1288.14 per ounce as of 1:41 p.m. We'll check the prices here in a moment, see what they are as of the recording of this video. It reached at $1298.42 an ounce on Friday, its highest since June 15th. U.S. gold futures settled up 0.3% at $1289.90 per ounce. The market is reconsidering its expectations for Fed rate hikes, and as the expectations have been scaled back, gold prices have been able to edge a little bit, said Suki Cooper, precious metals analyst at Standard Chartered Bank. The dollar slipped following dovish comments from Fed Chairman Jerome Powell, making gold cheaper for holders of other currencies. Powell on Friday said that U.S. Central Bank would be more sensitive to downside risk in the market, adding that it was prepared to shift its stance of policy if needed. Gold tends to gain when expectations of interest rate hikes ease because of lower rates reduce the opportunity of cost of holding non-yielding bullion and weigh on the dollar in which it is priced. As the trade tensions have eased, we've seen the dollar weaken somewhat, and in turn, gold prices have been able to benefit, Cooper said, and that may be purposeful, by the way. In exchange, probably China was saying, hey, your dollar is too strong, weaken it up a bit so that we can take advantage. And that may be what's going on. The United States and China are likely to reach a good settlement over immediate trade issues, U.S. Secretary of Commerce Wilbur Ross said on Monday. The main trend remains bullish for gold. From a technical point of view, traders are now watching the two key levels of $1277 and $1,300, which are the new support and resistance levels, respectively. Active Trades chief analyst Carlo Alberto de Casa said in a note, investor appetite for gold can be seen in the holdings of SPDR Gold Trust, the world's largest gold-backed exchange-traded fund, which rose to 798.25 tons on Friday, the highest since July 31st of 2018. Palladium, meanwhile, slipped 0.3% to $1297.49 an ounce after touching a record high of $1313.24 earlier in the session. We'll check those numbers in a moment, too. Industrial demand for palladium still remains robust. We continue to see a market that is undersupplied, but now we are also seeing an increase in investor appetite, which is applying an upward pressure on the market, which is already tight, Cooper said. Silver edged 0.1% lower to $15.68 an ounce, $15.68, while platinum was a little change at 822.30. We're going to check those numbers here. Let's see what they're doing right now. Here is the numbers for silver's down at 1569. Palladium is down to 824 from its higher earlier at 831. Palladium is down 18 cents at 1305 here, and gold is at 1289.94. So just edging up a little bit. The markets have moved somewhat, but not a whole lot. It'll be interesting to see. Let's take a look at Palladium's chart here and see how it has performed today. Let's see here. There it is. Let's take a look at it from, let's see here, 1 month. And we can see it's really kind of come up a bit today through here. Very interesting indeed. There's this 5-day move here. So it's really performing well, Palladium is. But Palladium is I consider it to be a fringe precious metals. Just like rhodium. Rhodium has doubled. You know, it's crazy. Silver's not much movement here. Platinum movement, some to the upside, but not terribly a whole lot here. Palladium is the metal that we've seen to watch here. Very interesting indeed. Dow Jones Industrial Average is up almost 100 points today, and it's interesting to see how things. Well, it's basically been in plus territory all day today. And if we look at the past 5 days, it's been pretty much in plus territory, almost like it's stabilizing somewhat based off of the easing of trade tensions, I think, mostly. But there's other things going on. The government shutdown, everybody's getting kind of used to it to a point, although obviously we feel for the federal workers who aren't getting paid right now, and even more, I mean, the federal workers who are working are not getting paid, but they will eventually get paid. 9 times out of 10, Congress will approve for back pay for those, but who I really feel for are those in the private sector who rely, like vendors and the like, contractors who will not get paid at all during this shutdown, which is unfortunate, but it's sort of somewhat par for the course, a danger in working with the federal government, but let's hope they come to a conclusion soon. And that will, I think, will bring the markets at least some stability. But nonetheless, a shutdown. This is, I think, the second or third longest, and everybody's kind of used to it. At least the markets are. They're reacting positively here. We'll see how that plays out. The precious metals. I believe that no matter what happens with trade and the stabilizing the markets, if the dollar index continues to go down, maybe as part of negotiations for this trade, somehow, some way with the Federal Reserve, they can find ways to make it happen, make that dollar index go down, well, then I think you're going to see gold continue to ease up over the coming year, no matter what the economy does. Even the economy continues to improve. If there is a recession, I think we will see the gold and silver prices rise more sharply. Not necessarily spike, go crazy at the beginning, but in fact, there's a chance they may even out or go down a little bit, but probably not by a whole lot, even though in some cases we've seen the case with oil and gas prices are down. Some people say that lower gas prices are a sign of a recession to come. I guess there's a lot of different things and indicators are out there. The canary in the coal mine. Which canary do we listen to? You know, it's hard to say, but nonetheless, a recession could still happen given all this, and even given where the markets are. We're overdue for a recession for sure, and I think what makes this one potentially different than priors is because of the bubble in the stock market. We have 2 bubbles in the stock market right now. The first bubble was from the injection of government liquidity, of the cash into the markets, the quantitative easing, and then you have the boom that has occurred since the tax cuts have taken place under the administration of Donald Trump. So those 2 things have been good for the markets. One of them is good for the economy. The other one is a false sense of security for the economy. But we'll see how it all plays out in the end. Nonetheless, there you have it. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, comment, and subscribe.